This is business. Thank you very much for taking your time to end the year with us here at Metropole Television. You can talk to us directly 2146. That is your SMS line at Metropole TVKE across all your social media platforms. What we have been doing for the entire of this week is ending the year 2020 by looking at the major industries and sectors across the economy in what has been a COVID-19 stricken environment for major businesses in the country. Now, Fitch Solutions in the insurance sector analysis earlier in the year already predicted a challenging short-term outlook in 2020 for the insurance sector. They indicated in the report that COVID-19 pandemic and associated economic disruptions, both domestic and in terms of external trade, were going to weaken the country's economic growth, leading to high unemployment rates and pressure on both corporate and household spending. Now, due to these factors, they forecast a minimal growth in both the life and non-life insurance sectors in 2020, while predicting that the market was expected to return to stronger growth in 2021 and heavily benefit from initiatives by providers to broaden the reach of insurance through increased use of digital sales and service channels and greater diversity in terms of product ranges. Now, the pandemic has already seen the sector report a sharp rise in policy cancellations in 2020 and withdrawals by customers who are now squeezed by the economic fallout from the COVID-19 pandemic, raising fears that many insurers could soon face liquidity challenges, especially in 2021. Now, top insurance in 2020, already confirmed a sharp rise in withdrawals and surrenders, majorly on life assurance and pension products, a trend linked to the coronavirus pandemic, which has hurt many livelihoods through job losses and pay cuts, with many policyholders struggling to sustain payment of premiums, while others are opting to use their contributions as collateral for loans as part of a race to remain afloat. So the question is, what has been the outlook for the sector in 2020? And to end the year in fashion for us here at Metropole TV's Business AM, as we usher in 2021, we are joined by Anthony Mwangi, who is the Vice Chair, Association of Insurance Brokers of Kenya. We are also joined by Adelaide Odhiambo, CEO, Blue Wave, and Washington Degea, Chairman of Bima Intermediaries Association of Kenya. Yes, I'm going to start with you, Adelaide. Good morning.
Good morning. How are you?
Fine. Thank you very much for joining us here on Metropole Television. I want to ask you, what has been the outlook for the insurance sector 2020?
So the outlook has, of course, no one predicted that very early in the year there'll be a call for a pandemic globally. And I'm sure most of the insurance companies were still completely, the infrastructure that was in place was still purely to be very conventional. But what has happened in 2020, is there has been a marginal increase in profitability. And that we could say is attributed to maybe a low claims ratio, the months of lockdown, those restricted movements. So even perhaps accidents, claims in regards to the medical space reduced. So there seems to be a very slight marginal profitability that we are experiencing. But still, the impact of COVID is still largely great, and we'll not be able to analyze it this early in time. I think towards mid-2021, the impact will now be very clear as we start now analyzing the reduction in costs. When we look at investments, most of the insurers heavily depend on the stock markets for their reserves and their investments. And this has also performed greatly poorly. So you can imagine the impact on that space is also going to be quite drastic.
Pretty much.
So in general,
yes, I'm going to come back to you so that we continue with that outlook. I want to get the sentiments of Anthony as well. Anthony, how would you summarize the insurance sector 2020?
Good. Thank you very much, Raja, for having me. I think, I think I'll just speak from where Adrian had reached, just to say that the insurance industry has had a very big hit by the pandemic. Obviously, we know the people soldiers were not able to move around as we do move around. And when you're not selling and being able to people, I think it was very difficult. It's also important just to add and say that we were with the Zooms and the digital platforms. Where we are at the moment is much better perhaps than where we started. So I think that is also something that affected greatly the whole issue of insurance penetration and coverage. And I think also, what I also need to add there is because especially also the clean gene has also brought about an element of health in the population. I mean, even here from the hospitals. So I think everything room there has also been some areas that it's positive, especially on the issue of hygiene. I think more or less factors.
Pretty much. All right, let me bring in Washington again this morning. Washington, how would you summarize the sector in 2020 as we look forward to 2021?
Adelaide.
Yes, Washington, can you get me? All right, we're still trying to get that connection reestablished as we are talking about the insurance sector and at 2020. And with that point, we're just getting exactly at the sentiments of our panelists this morning on exactly how the sector has fared on in 2020. Now, remember, everybody was summarizing it as a COVID-19 stricken environment. And I don't know whether those are going to be your sentiments, Washington, as we come to you.
Well, yeah, they've. Well, we all know COVID-19 has been quite negative for the economy, and especially for the insurance sector. As I've said, is just about the summary of what we've been looking at and foreseen. Things.
Yes, we're really struggling to get to Washington again this morning. So we're still on that. Once we get this running, we're really going to discuss on exactly how the insurance sector has fared on in 2020. Now, remember, Adelaide has said that, well, it was COVID-19 stricken, and we're going to see those effects fully come May 2021. And Anthony is also sharing the same sentiment that he agrees that what we've seen in 2020 is pretty much a COVID-19 stricken environment when we're talking about the effects of the coronavirus pandemic. Now, I don't know whether Washington, you can get me. We are really struggling to establish your connection. Are we clear now?
Yeah, I can hear you. Can you hear me?
Yes, we can get you. Can we go on with it then?
Yeah. Well, what I was saying was this, that I agree with my two colleagues.
Yes.
That the insurance sector actually, no one had foreseen what actually happened because of the COVID-19. It affected every sector of the economy. Of course, the insurance sector was hard hit. Remember, we are a sector that is supposed to be that is a service industry, and service industry means you got to be in touch with your clients. Actually, 80% to 80% should be a physical interaction. But you find that the COVID-19 has also taught us quite some few things. How do you do things without physically getting in touch with your clients? How do you, for example, submit claims forms online? How do you do? And let me tell you, most of my colleagues actually, most of them have been even shy to get into the digital space.
Yes.
We find some guys don't even have what you call, they're not even in WhatsApp groups. And that is a very, very basic thing. But you find now, COVID-19 has taught guys a new way of communicating. They've known now that you don't have to you don't have to physically go to an office. You don't have to even get in touch with your clients. Although, of course, it's tricky if you have a new client, so to speak, because a new client, well, he needs to see who Simba is all about, you know. Simba could be making noise behind the screen, but did I know how this guy looks like? Well, but it's a new way. 2020 has taught us a lot how to move forward in doing insurance business.
Yes.
And we just hope that if this trend continues, of course, there's some positives,
Yes.
according to what Anthony has said.
Yes.
There's some positives that has come out of all this. And we hope to carry on with the positives and see whether we are going to actually have an improved sector, so to speak.
Pretty much. All right, Adelaide, so let's get into the gist of what has been your sector in 2020. Now, what has the regulation environment in the sector been like, Adelaide, in 2020? With a new capital requirement regulation that was intended to reduce the instances where insurance companies are unable to pay claims reported by their customers, providing for an increase in the current standard capital requirement by 300 million to 2.7 million for general insurance to 600 million or 20% of the previous year's net and premiums. Can we talk about that? Why are you ready for that? And was that a necessity from the regulator to your business?
You see, we're getting into a very precarious future.
Yes.
Where everybody has got to have a mind shift and a mind change to be able to make sure that this industry and this sector still remains relevant and
Yes.
sustainable. With the changes, and just leave alone the pandemic only, there's global warming. There's a lot that is happening on a global level that is going to impact our livelihoods, is going to impact how risks are considered. And it's a very good time for the regulator to come in strongly and ensure that those futuristic approaches are actually now well catered for in the products, in the pricing, in the reserves, in the capital requirements to ensure that this industry still remains relevant and strong and can be able to cater for the liabilities at stake because of the changing shift of times.
Yes.
So I believe it's something that has to be considered very positively. Looking at it from an actuarial perspective, we now have to revalue our models. Most of our models that we have been looking for over the last 50, 60 years have not been catered for such drastic changes in a very short span of time.
Yes.
Some of these changes were taking decades, but right now they're taking just a few, less than 5, 6 years, and we're already seeing the impact of them coming in strongly. So this readjustment is mandatory from an actuarial perspective to ensure that the insurance sector still remains relevant.
Pretty much. Anthony, I'm going to bring you in on that as well. I mean, well, you like to think that any sort of regulation from your regulator to the insurance companies could have waited probably until you're done with the coronavirus pandemic. That's when you say, let's look at your stability before we push any regulation to do that. Could have that worked in 2020 as opposed to what we've seen the regulator do?
Well, I think so. Obviously, because some of these regulations had been planned for a long time, even before COVID came. So
Yes.
just reversing them just on one day is also not necessarily possible. What I believe is going to happen is that the regulation and the regulator will be quite business sensitive. And I think if he realizes that a lot of insurance companies or a lot of players in the industry are having challenges, I'm sure he or as an authority would be able most likely to come in and make some adjustments. I think, let me say, because if we don't do that, then we'll see, and something that we don't expect. For instance, we're going to see our companies being sold for a sum.
Yes.
And I don't think there's anybody, it is a regulator's interest to see that happen. So yes, the regulations can wait, can be tightened, because again, during this time of pandemic, you also need to be a little bit careful. I mean, you want to be sure that premiums are paid on time, claims are also being paid on time. So some sort of regulations are certainly going to be put in place. But I don't think those very fundamental ones that will have a very big impact, most likely, in my estimation, the regulator most likely would want to come in and change. Obviously, again, when you change things so fast, you'll be almost reacting without even knowing how far will this pandemic go and what will be their full impact. So again, that will be the reason for waiting and wait and see what eventually will they turn out, so that when you put the regulations, now there will be regulations based on fact and science, as opposed to just reacting on where we are at the moment. So I believe there is reason to wait, as you also watch the consumers not to be taken advantage of.
Yes, Washington, you've been hard hitting your regulator through the entire year. You have never taken any side for him, Washington. You are on point saying, I don't understand. Would you share with me what your sentiment would be on any regulation that you've seen pushed into your sector this year? Would have it waited until we're done with 2020?
Well, you're very, very right, Simba, because at the end of the day, regulation is what actually makes the success of any industry.
Yes.
And if you have bad regulation, if you have rules not being enforced, then you have like a jungle out there, you know? You have people being taken advantage of. You have things not, people losing faith, for example, in the insurance sector if the regulation is not right.
Yes.
But you see, like my colleague has said, it's important that whatever regulation is done for the benefit of the client.
Yes.
You know?
Yes.
That's what the insurance industry is all about. It should be done for the benefit of the client. It should not be done for the benefit of insurance companies like we've been seeing. Like it's insurance companies are actually more like matter in the insurance industry more than the client.
Yes.
That an insurance company will not pay a claim and still continue operating. That's not the kind of regulation we are looking at. And you are very, very right. We're still not happy with what is happening in the insurance sector. Remember, this is a government arm that is doing all this. I wish it was a private sector. It should have been shut down by now. But this is a government, you know? And the government, so to a certain extent, as we have seen, it seems like it has a license to do anything it wants. But you see, the point is this, regulation in this sector, going forward with the constrained economy, let it be for the benefit of the client.
Yes.
If it's about, for example, like paying claims, that's, for example, making sure that the companies meet the minimum capital requirement, will let it be beneficial for the client.
Yes.
So let it be. You know, let it be. If the company cannot do it, let it be shut down. You'd rather have 5 companies in this country than have 50 that don't pay claims, you know?
Pretty much. All right, Washington, I'm going to come back to you on that as well. Now, Adelaide, yet still on that regulation environment. Now, the sector's regulator has given 20 of the country's 56 insurance companies until December, by the way, 2020, to meet the capital increase requirement. A difficult mission in the current economic context. Now, Adelaide, talk to me from an inside-out approach. Are we likely to see acquisitions and mergers come 2021 as smaller insurers struggle to meet this regulation? What are we looking forward to 2021?
I cannot echo Washington's final statement loud enough.
Yes.
It is better to have 5 insurance companies
Yes.
that are upbeat, that are in touch with the time, that can pay claims, that can be able to service this changing and drastic economy, rather than 50 and 100 that are just really confusing the sector and actually jeopardizing the growth altogether.
Yes.
So absolutely, I welcome the changes that will help these companies come together, solidify, merge, and reduce their expenses ratios drastically, invest in technology, come together and become more futuristic, rather than having very many who cannot even meet the basic capital requirements, which is such a huge challenge to the market, the industry, and the end policy holder.
Yes, Anthony, just quickly on that, you hear Adelaide is saying would rather have just a few that are meeting these capital requirements and all that. But is that good for your business, Anthony, from where you said it this morning? Should we say, let's help them meet that by giving them time? Or should we say, well, if you can't meet it, then you're stricken off the economy?
I would say stronger insurance companies and definitely are good for our market.
Yes.
That I don't think I cannot overemphasize.
Yes.
I think what I would urge for caution is where we'll be forced to go into merging, just because perhaps companies have been hit by pandemic. I would want a merger, perhaps an acquisition that is based on mutual understanding of companies so that people can also realize their wealth and their money.
Yes.
I think for me, the most worrying thing is that when we talk about mergers and acquisition that I think we have seen over the last couple of years, is that it's not even the local companies that are merging with our local companies. There is a lot of buyout of our companies, particularly from down south. And I think that to me would reach some fright of our capital and our investments. And I think that's a bit worrying. Any company, particularly for banks or insurance companies, this is where we coalesce all our resources and our savings and everything else.
Yes.
And I'm sure if you go to some streets in Sandton, South Africa, you'll actually see Kenyan money there, because there are some companies that actually have frightened a lot of our premium. So mergers and acquisition, I support them 100%. I agree we must be able to have very strong companies. I think my only worry would be that let's not sell our resources for a song just because of the situation we are in. Would that mean that companies should be allowed to go without paying claims? Absolutely not. But I think let it be a more, a more well thought out in terms of mergers and acquisitions, where companies are coming together because they think they share a common purpose to grow. And more importantly, I would actually want to see companies, where Kenyans are also retaining a good share, because the moment we give our resources, we may never get them back.
Pretty much. Washington, I'm gonna come back to you on that, but mergers, yes or no? I just need that answer for you. We take a short break, because once we come back, we're gonna get that sentiment and we talk about the big elephant in the room: insurance penetration. We are ending 2020 again on another low. Washington, do you support those mergers and acquisitions? Yes or no? We're gonna come back to you once we come from this short break that we're taking here on a Business M. This is your sector review and industry review 2020 here on Business M, as we end 2020 and usher in 2021. Short break. Once we come back, we still have the lovely guests with us here on a Business M.